Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of some remarkable improvements in American income and spending activity. But first we should note that China is on its week-long Labor Day holiday now. Its financial markets will be closed Monday through Wednesday, but for most it is expected to be a period of enthusiastic domestic travel. At the same time, China is claiming remarkable results in stabilising leverage and promoting growth by reducing its countrywide leverage ratio by 2.6% in the first quarter of 2021. It fell to a still sky-high 277%, with their government ratio at 45%, their households at 72%, and their business enterprises at an eye-watering 160%. In China, there were two factory PMIs reported over the weekend for April. The private Caixin survey reported an expanding sector with its best increase in output and sales for 4 months. New orders increased, but supply chain issues are holding them back from even better results. The official version of this survey was more restrained, reporting a smaller expansion from the modest March one. Both these surveys reveal a timid expansion compared to the booming American one, quite the reversal of fortunes between the rivals. And stung by the return of the pandemic, Japanese consumers are increasingly depressed ahead of the Olympics, with downcast views that are quite different from their business counterparts. There were more GDP results reported over the weekend for the first quarter of 2021. In Taiwan, they saw their economy grow at a fast 8.2% clip from the same quarter a year ago. But Germany reported a 3% fall on that same basis. Overall, the EU said its economic output shrank by 1.8%. Slightly less than expected. Their bounce back has left them worse off than before the pandemic started. For them, it's a double-dip recession, and also a very sharp contrast to the US. In the US, they reported a huge spurt in household income in March from February, based both on the federal stimulus payments and rising employment. They also reported a large 4.7% rise in household spending in March from February. Prices rose at a 2.3% annual rate. Some now think this is just too much juice. In the industrial heartland centred on Chicago, their regional factory PMI is very strong indeed, coming in far better than the strong result expected. New orders surged. Plans to hire more staff were reported by more than half of those surveyed, and prices rose sharply. The overall PMI there is their highest in almost 40 years. The US Treasury 10-year yield starts today at 1.63%, up 1 basis point overnight, and the price of gold starts today at $1,769 an ounce, and that's up a minor $1 since this time on Saturday. And oil prices at little change today at just under $63.50 a barrel in the US, while the international Brent price is just on $66.50 a barrel. And the Kiwi dollar opens today at 71.6 US cents and unchanged since Saturday. Against the Australian dollar, we're still at 92.9 Australian cents, but against the euro, we've recovered to 59.6 euro cents. That means our trade-weighted index is now at 73.6. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.